Yeah, one of the big issues when the entrepreneurs start to reach the venture capital is valuation. How do you feel that kind of problems of valuation today that is very much changing the game from the last success that happens in economics in the last years?
Well, I don't understand why valuations have gone up recently. They seem to have, at least in the U.S., because the venture capitalists have not made very much money, except internationally. In the U.S., venture capitalists for the last 10 years have not made much money. It's been not a good return. But somehow those valuations have crept up. Now, if I'm an entrepreneur, it's funny, the first time I'm out looking for money, it's all about what's the valuation. The second time I'm out looking for money, it's just, get me the money. And you always want your investors to be making money. You want to start low enough so that the next time you go out for money, the investors are moving up. You want the whole progress of your business to always be moving up. So valuation should not be a key issue for you in the in your first experience with a venture capitalist. I think the valuation should be very much secondary. I know the best venture capitalists don't want to own too much of your business, because then it's their business and then they have full responsibility for it. A good venture capitalist wants you to be responsible for your business. They want you to run your business, and they want to just be able to tag along.
Well, that brings a very complicated situation that usually in Latin America, one of the big issues is the investors want to keep control of the investment. From that point, you are saying in the other way around.
No, control. I'm not saying that whether the investors or the entrepreneur has control. We ideally want no one to have full control of the business. We want the control to lie in the hands of the shareholders, the happy shareholders, and that means we want the entrepreneur to own a big piece of the company. We want the team to own a big piece of the company. We want the investors to own a big piece of the company. We want the future employees and future investors to own a big piece of the company. And we don't want anybody to be able to totally control the company. We want it to be more of a board decision as to where the company, what direction the company heads, and a CEO decision on how the company gets there.
Okay, now moving a little bit into the open source conditions, that is taking off very strongly in a lot of places. What is the feeling that open source business related are good business opportunities, or do you feel that are not the right business model?
Well, it depends on what you do with open source. If you have a good open source company, that means that you've taken open source and allowed other developers to build interesting applications, product into your product, and then you've taken that and branded it your own. I think that's a good business model, but you also need to be able to make sure that you have some sort of control over your product so that the quality is good for the customer. In another language, it would be, when you have a YouTube video, it's all done by people out there doing their own video, but most of the quality is not very good. And so if you are running an open source company, you've got to make sure that the quality of your code and the quality of what you do for your customer is very good. I do like the idea of having a lot of developers out there doing good things for you for free, but you've got to be very aware that as a business, you've got to be solving the problem for one person and one person alone, and that is your customer, whoever your customer is. I think that there's some great opportunities now that are happening because of we're going to be able to store everything in the cloud, And by storing everything in the cloud, we're going to be able to have a different kind of computing experience started by these, tablets and the wireless devices. So I think that there's going to be a great opportunity of applications that go out into the cloud, and maybe there's some open source applications in that direction.
Yeah, and that's a very important area that is popping up very much, and universities are getting there. And in that sense, one of the questions from Polly, one of the people in the audience, is asking and worry about it. He say, I already presented.
Hey, Polly.
Yeah, he presented already to several investors in Latin America a non-pre-revenue company that say, well, has a big potential, and usually they get rejected. How you can...
Wait, a company that has revenue or pre-revenue?
Has not revenue.
Has no revenue.
No revenue.
Yeah, well, they do get rejected. It depends on what you're doing. If you have something that's pre-revenue that really looks like it's taking hold with a customer, then you should be able to raise some money for it if it has a big enough future. One thing that a lot of entrepreneurs don't look at is how big does the market get? Could this company become a billion-dollar business? I know venture capitalists look at that almost every time they look at an entrepreneur. They say, well, how big could this market be? I want entrepreneurs to also go through that exercise and say, how big is the total available market to you? If every one of the potential customers paid whatever it is you charge for their product, how big would all of that add up? What would all that add up to? And if it's not $1 billion, I think that you are going to have a harder time raising money.
And that is quite important in the audiences. We really need to help a lot, and that's the word and Tech Valley is really focusing. How to show that vision, because when you talk about $1 billion for you is usually the minimum amount of money or the market that you really would like to tap. In other times, is not in Latin America. Usually, you want to start much slower, much more smaller. That's how can be really a big opportunity with this concept of global entrepreneurship or global markets.
Yeah, I mean, if you can get to be a $20 million business in Brazil, that might translate into $1 billion business worldwide. So I think I think it's great that you can start a business in Brazil or in any Latin American country, because you'll have some very forgiving customers. Your customers will be local. They'll speak your language. It'll be a very nice community that will favor your products over other products. But once you've gotten to those customers and they are delighted with your products, you are going to want to go beyond Brazil and beyond your local country, and I think you should look at your own country as the beta test for your product, and the globe as the total market for your product. And I think that'll help you. I think people will, it will help you understand and be thinking globally from the very beginning. You say, these first customers, they're going to be the ones closest to me. They're going to be the most forgiving. They're going to understand that this doesn't work as well as it should. And then once they've got it down, then you've got to immediately get the English-speaking version, maybe a Chinese-speaking version. You've got to get the other versions out there.
Okay. Let's see. Now, the regulations of different countries in Latin America, how much that affects from the tax purpose, from the capital gains point of view, how much is really a restraint, or there is no problem for you?
We're trying to be completely open to whoever we invest in. But some countries don't understand this one thing. And the United States is one of the worst. They don't understand that they are in competition for the great minds, the entrepreneurs, and the capital of the world. If they understood that, they would realize that they have to compete as a government, and they need to do things that will attract business and attract capital to their country. And I think that's starting to happen in other countries of the world, but the U.S. is somewhat blind to it. It's hard for the U.S. to see, that, since we're so big and so strong and so powerful, that it's very important to continue to be the best free market, to be the most open government, to be to have the most freedoms and the best free trade of any country in the world, because that is what attracts entrepreneurs and money. And so if you have the ear of your governments, make sure that they understand that they are in competition for the businesses and the capital of the world, and a very light touch is the best kind of governance.
Okay, we have another question. They're asking, what are the most important aspects that you're looking at a startup? Like, for example, traction, team. What is the order? You know, like the most important order for you?
When I was getting started in the business, I was able to meet with every entrepreneur that I came across, and I was able to spend some time with them and get to know them. And in that case, it got to be the most important thing was the people. And I still think that's true. How the individual entrepreneur performs, how they get along with the rest of their team, how motivated and dynamic the whole team feels. Those are really key, very important items. But to go through the venture process, you have to go over a few hurdles. You need a couple of things. You need a very large market size, global market size. You need, and you have to come up with that and be very frank with yourself, be honest with yourself about how big it really is. You need a technology that is unique and a direction that is not out there, or you have something that is very different from what other people are doing. The uniqueness is very important, because if you're just trying to do a social network, if you're just trying to do another social network, it's done. Facebook has done it. If it's just a vertical within a social network, it's done. It's inside Facebook. You have to have your own slant. You have to have your own strategy that is so unique and so forward-thinking that the customer will be, that Facebook will be blindsided and the customer will be delighted.
Okay, Tim, is here once again into the contact the local representative. What is the closest office in Brazil to be contact for request for investment? There is a specific questions into the with pre-revenue companies.
Well, we have DFJ Fear Capital is in, it's DFJ FIR Capital, and it's under FIR Capital, Fear Capital's umbrella. Simon Olson was the top guy there, and he is in the process of leaving, but you'll have to pass it on to the next guy, and we should figure out who that is. But the best way, the closest way for you to reach us is just to send me an email.
Yep.
Send tim@dfj.com an email, and then you will we will get you in touch with the closest office to you. In the case of the people in Spain, that would be the DFJ Esprit office in London, but they have, I believe they have a couple of people working out of Southern Europe too.
Okay. Well, some other side is, we're talking very much to entrepreneurs in this audience, but these entrepreneurs are in some way also fostering that local investment happens. How do you suggest to the startups start pushing and try to really create much more interest into the local investment groups.